One of the biggest questions we ask ourselves through life is, how do I retire? How do we retire? So I created this guide for investors. Hey, how do financially free people invest their money to get a retirement where you don't have to worry about money? Do you think retirement is an age where you just stop working and then the money's magically there? Or what if money or retirement is actually a dollar amount? And once you have invested in things that are paying you more than your monthly expenses, that's when you can retire at any age. That's what I'm working on. Hey, folks, my name is Brad Reed. If you want to email me, it's bradreed@winwinfinancialsolutions.com. That QR code there in the bottom right will take you to a form where you can tell me some information about yourself and what you're interested in. Do you want to learn and how to invest like people do for financially free? Because I do shop multifamily apartment complexes where people can invest in them. I'm also a realtor in the state of Indiana. So if you or someone you know is looking to buy or sell a house, I would love to know that as well. The purpose of this video is for education and entertainment only. I will be talking about some investments, but in this video, there are no offers to buy or sell any kind of security or investment. This is not investment advice. This is not tax advice, although I will be talking about investing in taxes. There is not accounting advice, nor is this legal advice. Investing involves a high degree of risk, and I will be talking about some investing that involves a high degree of risk. So you have to be able to do your own analysis and make your own decisions because you got to deal with your own results. If you do want personalized advice, please seek a competent and preferably licensed or certified professional in your area. When I was growing up, I had all different kinds of views on what retirement was. As I go through this list, see if you had any of these and where are you now? So my first thought was, hey, you save up a bunch of money and then when you get to a certain age, you spend it. And then I learned about Social Security, how that used to help people in a significant fashion, but now Social Security pretty much won't even keep you above the poverty level, and the benefits are getting smaller and smaller. Then I learned that you could hire a financial advisor, and that financial advisor will help you invest your hard-earned money. And then when you retire, you basically sell those investments for spending money. There are these vehicles of 401k, IRA, Roth IRA, other types of stuff that give you some tax advantages. But still, the strategy is to let someone else grow it for you. Then I learned that the financial advisor is going to end up with more money than I did, or that you would, because the financial advisor is going to get their percentage, their cut every year, even if the stock market goes down. So if your investments lose money, the financial advisor still gets paid. That's why he or she will end up with more money at the end of the deal. So then I thought, hey, if the financial advisor can do it, well, how about I just go learn how to invest and trade? But it still ends up selling investments for spending. It took a lot of time. A lot of people think that you're safe if you diversify your stocks across different sectors, such as commodities, such as retail, such as building, real estate, and technology like NVIDIA, Apple, things like that. But it turns out that the stock market, all the different sectors, all the way that you can even diversify between stocks and bonds, really they're all still about 60% correlated. So most of the time, if one goes up, they all go up. If one goes down, they all go down. And that's not what we want for retirement. There's something called inflation, which means the price of the stuff that we need to live off of is increasing just about every year. Typically, it goes up at about 4%. And I know there's going to be some arguments. I'm recording this in February 2025. The government says their goal is 2%. But if you look at a floating moving average over the last 120 years, 4% has been the typical number. Either way, prices are going to double about every 18 years, and prices are going to triple about every 30 years. Now, retirement, or people are living longer, but a typical 30-year retirement means that the cost of living is going to triple in that time frame. So right now when I go through a drive-through and I get my kids a cheeseburger, fries, and a soda, that cost about $10. In 2055, that one bag of burger, fries, and a soda is going to cost $30. If you don't believe me, go look at the trends of what things cost 18 years ago and 30 years ago. That's what you'll see. Another problem with these strategies for retirement is that it all based on selling something and spending something, and really you just better hope that you die before the money runs out. And how dark and twisted and awful is that? If you've ever heard any of my podcasts or videos or things like this, you've heard me say, invest on logic, not on hope. So if hope is in your retirement plan, we have room for improvement, and I'm going to help you with that. And I'm going to try and speed it up so this isn't a 30-minute video like the last one I recorded. Going to try and go faster and save you time. What we are looking for, what the financially free people have that the rest of us don't have yet, is they have opportunities that when they invest, the investment pays them money regularly throughout the investment. They get a check every month, every quarter, every year while they're in that investment. That's what we want to look for. We also want to look for this investment that grows the principal at the end of the investment. This is the same investment, okay? Imagine this, you put money in and let's say it's a 5-year investment. You get paid every quarter throughout that, and then at the end you get a big lump sum that's way bigger than the money you put in. That's what we're looking for. And then to make it even better, things that are not correlated. So something like real estate, which tends to do better when the economy does worse. Things that are not dependent upon the stock market. Things like sports team, energy. Everyone needs energy, whether or not the market is doing well or not, whether or not the economy is doing well or not. We all need energy. Things like these that are non-correlated, that when one goes up, the others, we don't really know if they're going to go up or down as well. That's what we're looking for. So which retirement plan are you planning for? And if you're not planning, what's the expression? If you fail to plan, then you're planning to fail. If this is what your retirement's going to look like, one small trickle of water coming over the wall that may be dependent on the government or may be dependent on one certain sector in our economy, I think that is considered high risk. That's not what I want. What I'm looking for is an abundance of many streams of income that are coming from different directions and different sectors and different sources, and that are growing sources of income, not dwindling sources of income. So let's talk about how we build this beautiful picture here on the right in an economic term. First thing, I want to challenge your mindset. Question for you. What is the first thing that comes to mind? I'm going to give you a scenario here, and it's very important that you think of the first thing that comes to mind, because that will determine your financial future if we don't change it. So what is the first thing that comes to mind if you were to win $200,000, or you receive it, or you inherit it, or somehow, boom, $200,000, you get a bonus at work? What are you going to do first? Are you going to buy stuff? Maybe go on vacations? Are you going to give gifts to friends and family? Was that the first thing that came into your mind? Or were you thinking more about paying off debts, or invest with a financial advisor, or that guru that's on YouTube and TikTok and used to have a lot of podcasts and a radio show? Are you going to follow whatever that person says? Or are you interested in taking the $200,000 and buying a money machine, one that invests, that pays you regularly over time and grows your principal at the end of the investment? Which one of these, red, blue, or purple, was the first one? Now, if it was red, you're like most people here in the United States. The problem is this is where most low income and not financially free people end up. Okay, this is not where you want to end up. Two stats: 90% of people that win the lottery file bankruptcy in a year. Think about that. 90% of people that win the lottery, they don't just spend it all, they spend so much more than they won that they have to file bankruptcy in less than a year. The other stat that I heard is 2/3 of professional athletes have lost it all in 5 years or less. Okay, it's because their mindset. They think, hey, I got money, I can buy stuff, I can travel, I can give gifts. Middle class, if you thought about paying off your debts or investing with steady, slow financial advisor type things, you're probably bound for middle class. A comfortable retirement, but certainly not the dream life or the financially free life. The first thing you thought when you thought about winning $200,000 was to buy an asset that's going to pay you over time, grow your principal, invest in a business, a good steady business, not something like a restaurant in a wild, crazy town. But something reliable. If that's what you thought about, then you are destined for financial freedom. So here's the thing: if you did not think about purple, start working on your mindset. Start working on changing what becomes appealing to you. Because trust me, the purple people can do both the blue and the red. Let's figure out how we get there. All right, let's say you live $200,000. Yeehaw, that's what you used to say in Texas. Yes, it is. I grew up in Austin, Texas, but I spent a lot of times in yeehaw parts of Texas. So let's say you get the money, you pay off some bills, you pay off your house, even though you've got one of those ridiculously low interest rate loans. Let's say you buy a fancy car, you put the rest with a financial advisor, and did you save enough left over for taxes, or are you going to jail? Or are you in trouble? You're going to file bankruptcy because you spent too much, you didn't save enough for taxes. So pretty much here, the money's gone. Maybe a little bit is going to the financial advisor. But what if we try the purple strategy? What if you buy a money machine strategy? All right, so here's the type of investments that I am finding by buying apartment complexes. Let's say you invest the $200,000 in the apartment complex that I'm looking for. I've found many of these. Actually have one right now, a little bit different than this, but 8% cash on cash return. That means every year you're going to get 8% of this $200,000. And then by the end of 5 years, the plan is to sell the apartment complex. And the projections are every investor will have doubled their money. That includes the cash on cash return and the equity at the end. But at the end of 5 years, between selling the asset and the cash you received during the 5 years, you will have doubled up. So what does that mean? Well, here's the one most people don't think about is potentially massive tax benefits, right? You just got the $200,000. You're going to pay taxes on that unless you can find something to offset your taxes. Real estate, multifamily real estate is a great way to do that for some people. That's why I put potentially here. You got to live in the right place. You got to have the right accountant, the right lawyers. So go talk to them to see if this will apply for you, if it will help you. But the 8% cash on cash return means you get $16,000 a year for 4 years. And then in the 5th year, you get $336,000. Now, if you look at these things over here on the left, with $16,000 per year, can you pay off some bills? Probably can. Can you pay down your house if you would want to? Yeah. But if you got one of these low interest rate loans, why would you? Because you can grow your money faster over here than it's costing you on the house. What about buying a fancy car? Maybe that's your goal. What if you take the $200,000 and you pay $16,000 a year for a car? Is that $1,250 a month? That's a really fancy car. And at the end of the 5 years, you have more money than what you started with, and that fancy car is worth half or less. Folks, this is what the financially free are doing. This is what I am doing with my family so that we can become financially free. Now, let's say you take this $336,000 in year 5 and you do it again, 8% cash on cash return. You get a 2x multiplier in 5 years. That's what the shorthand looks like. You might receive even more tax benefits because you're invested 336 instead of the 200. 8% of 336,000 means you're getting 26,880 per year for 4 years. 564,000 at the end of year 5. Guess what, folks? Rinse and repeat. Do this over and over and over again until your annual income is replacing your spending, right? Until it replaces your annual expenses. That's what my family's trying to do. That's what I'm doing. That's what I'm working on. And I want you to join me in this journey, rinsing and repeating. Now, what if you did not spend the cash on cash return? What if you saved it? What if you did not spend $26,000 per year? What if you saved it all? In 2025, let's say you invest $200,000. In 2030, it's going to double up to $400,000 if everything goes as planned. And then you do that again. In 2030, you invest the $400,000. In 2035, it doubles up to $800,000. In the next 5 years, you invest the $800,000 and it doubles up to $1.6 million. Now you get into the time where you're going to start spending the cash on cash return. Folks, what did we just say? $200,000 in 2025 becomes $1.6 million in 15 years. 8% of $1.6 million is $128,000 a year for you to live on, and it's growing. That's what I'm talking about. All right, so interesting blue arrow there. I should have done something different. Tony Robbins wrote a beautiful book, The Holy Grail of Investing. He had a co-author, Christopher Zook. Great book. Buy it. Read it. Ray Dalio is one of the best investors of our time. And he says the holy grail of investing is to have 10 to 15 non-correlated, diversified investments with asymmetric risk reward. What the heck does that mean? Asymmetric risk reward means there's higher upside than downside. Okay? Asymmetric risk reward. More room to the upside to win than there is to lose. Diversified. You got different operators, you got different locations, you got different companies, you got different sectors, you got different time frames, you got different geographies, you got different stuff. Diversified. Non-correlated. When one goes up, it doesn't mean the others go up. If one goes up, it doesn't mean the others go down. They're all independent, right? This is the problem with most people investing everything they have in the stock market or public equity, stocks, bonds, options, futures, all of those derivatives. 60% of this stuff trends together. They are correlated. If the market goes down, there's a high probability that all of this goes down. I know some people say, hey, if the stock market goes up, the bond market goes down. If the bond market goes up, the stock market goes down. In the recent decades, that has proven to be not true. So here are some asset classes that you can go check out. Of course, I like real estate. I like energy. I'm really looking into private equity, trying to get more into that. Energy is fun because the growing needs are outpacing our ability to supply the energy. So oil and gas is never going to go away, especially as we increase our need for plastics. If you didn't know, plastics come from oil. So oil and gas, they're still drilling. It's becoming more and more economical, but huge opportunities to grow your money in energy and also nuclear. Nuclear is becoming much, much safer. The nuclear units are much, much smaller now, and you link them and daisy chain them. And the new nuclear units are actually using the old nuclear waste as fuel. So the future of nuclear is really outstanding. And the future for cars, I believe, is hydrogen. That's just now starting to come out. I'm looking for opportunities in energy and all this stuff. Diversify across geography, time, operators, anything you can. All right. Peter Mallouk gave a report in June of 24 on how wealthy people allocate their investments. Spoiler. Real estate is the largest allocation at 40%. This is what I am studying right now. This is what I'm learning. This is what I'm investing in. This is what I am getting so that other people can invest with me into real estate, multifamily real estate, vacation rentals, Airbnbs, all that kind of stuff. Private equity is where wealthy people have 30% of their assets. We just invested in a paving project where the operators are going to get some paving companies and that they have found that are not very efficient, make them efficient, make more money, sell them, and then we get money throughout the process, throughout the term, and money at the end. But looking for more private equity opportunities, public equity, stocks, bonds, options. Stocks and options are my favorite. That's what I know. That's what I like. Here's a quote out of the book: tax efficient income, potentially unlimited tax deferral, and tax avoidance of all capital gains are why many of the nation's wealthiest families are real estate dynasties. So if you're wondering where to start, if you're watching this and you're worried about retirement, you probably already have a pile of stocks and bonds. If you don't, that's an easy place to start because they're cheap, they're very easy to get into. But real estate, understand real estate is the largest allocation of the ultra rich, of the wealthy, of the financially free, of those that are giving abundant gifts like building houses for the homeless in Costa Rica, where I'm going to next month, or opening up doctors' offices for free medical care in Africa, like one of my buddies is doing. All right, so my portfolio goals. Long term, this is what I just laid out. Short term, this is a more realistic option for me, but notice how these different asset classes are not correlated. If the government files some sanction against oil and gas, I will have streams of income from the others. If the stock market goes down, I will have stream of incomes from the others. If real estate somehow gets wrecked, I will have opportunities from the others. This is my diversification. This is my safety net. I am looking for people that create investment opportunities. I am creating them myself in real estate, multifamily, and short-term rentals. I am looking to partner with people that are creating in these other asset classes. If you are interested in this, if this sounds interesting to you, I'm going to show you my QR code here in a little bit, and you can get on my list and we can talk about it. Doesn't mean you have to invest. Just says, Brad, what are you doing? I'm curious. I want to learn more. That's who I'm trying to connect with. Realize, if you invest with these people, I will get paid. That's what I'm trying to get set up. I'm trying to do this for my family. But if I do all this work to set this up and to understand all this, I want to get paid as I help other people. You got to be okay with that. Just know that that's what I'm doing. All right. So what are you planning for? Which one of these? I'm trying to do this one on the right. I think you should be too. And it looks like this, either the black or the blue is this over here. All right. All investing has risk. Crazy things happen, folks. And I never thought, what does crazy things happening mean? And I've been paying attention the last couple of years. There was a huge fire and places were burning down, people's houses, rich people's houses, poor people's houses, apartment complex, and there was no water in the fire hydrants. And the government was turning away firefighters from other places that wanted to help. They said, no, we don't like your fire truck. That happened. That's crazy. In the United States in the last couple of years, gangs from a foreign country got into the United States and they hijacked apartment complexes and they took rents from the tenants and the landlords didn't get anything. The US government did not do anything. That's wild and crazy. Interest rates have gone up the fastest that they ever have in the last couple of years. They've come back down some, but there was a moment where they had gone up the fastest. If you had a floating rate interest loan, that hurt. You got screwed. What if 2008 happens again? What are you going to do? What if the government tells tenants that they don't have to pay their rent and that the landlords can't evict them? Crazy things happen. Investing carries risk. If this does happen, you're not going to hit the projections. You might lose your money. Because when we say crazy things happen, this is the stuff we're talking about. And this stuff just happened in the last 5 years or so. It happens. It's possible. You got to be at peace with it. Here's the thing that you need to be at peace with. If you go into an investment with me and I get paid and you lose money, can we still be friends? If that answer is yes, because you studied it, you understood it, you made your own decisions, you said, hey, you know what, Brad, the asymmetric risk to reward is there. There's more room to the upside. I know this is what the wealthy people do. They take on this risk. Therefore, I'm going to take on this risk. And yeah, this crazy stuff happens, but hopefully probably not. Maybe let's invest in places where this stuff is less likely to happen. But yeah, if it all goes down the drain, can we still be friends? Yes, then let's do it. If not, it's okay. Go invest with someone else. Go figure it out with someone else. I still want to be friends. I still want to be family. All right, so how do you get started? With many of these, not all of them, with many of these, we have to know each other. So let's connect. I have to know your financial situation. I have to know where your money is, how much you got. I know it sounds really personal, but in order to get into some of these, the government requires that we have an established relationship and that I have knowledge. It's a government thing. It's not me. Look it up. It's SEC rules. For most of these, 50,000 is the typical minimum. If you got it somewhere of cash or you can get it, cash is king. It's the easiest, it's the smoothest. But if you have a self-directed IRA, we can use that. Now, if you have an IRA with one of these big banks that you see a lot on TV commercials, they may not, or they may actually tell you, you cannot invest in apartment complexes. You cannot invest in oil and gas syndication. You cannot invest in private equity. What they really mean is you cannot invest with it there. You got to get it to another IRA with another custodian, and there you can. Because I had to do that. I've done that. I do have a self-directed IRA that I have invested in an apartment complex and in a collection of Airbnbs. Perhaps you have an old company 401k. You can either move that into a self-directed IRA, or you can set up a solo 401k. That's a little bit more expensive, so got to have some money in there. But I have a solo 401k and I have a self-directed IRA, and with both, I'm investing in these types of opportunities that I've been showing you on previous pages. All right, what else? There's going to be a private placement memorandum that's going to be a lot of pages. It's going to be in legalese. And here's the worst part about it. I cannot advise you on this stuff. I can tell you what the team is projecting. I can show you how we pulled comps, how we've done our analysis, how we've done the math. But when it comes to the legal stuff, I am not allowed to advise you on that. The law, the government prevents it, and other lawyers enforce that like you wouldn't believe. I cannot give tax advice. I cannot give investment advice. So if you need legal advice, I can tell you where I get mine. I can tell you where I do my taxes. And yeah, and AI is super helpful on a lot of this stuff. But it will never replace, well, I don't know about ever. Currently, it does not replace seeking a licensed professional that can advise you. All right. So folks, here's the end. If crazy stuff happens, are you okay if I get paid with you invest and you lose money? Trust me, believe me, those of you that know me, know my heart, I would never bring an opportunity to someone that I thought that there was a potential or even a high, okay, that there's always a potential of losing money. But if I thought there was a high likelihood of losing money, I would never bring it to you because I don't want to do one deal. I want to do 100 deals. That's why my company is called Win-Win Financial Solutions. But this scenario is possible. Highly unlikely. It'll be a huge nightmare for me. But just know before you scan that QR code that it is possible that this happens. If you're ready to get started, if you're ready to invest like the financially free, if you're ready to invest like the wealthy, like the people that give big life-changing gifts, if that's in your future, and I'm the person you want to partner with, scan the QR code, send me your information. Let's get started. Folks, thanks for watching this video. No matter how you invest your time, your love, your money, or your energy, always invest on logic, not on hope. God bless you.